Hello, and thank you for choosing the Johnston team for your new home financing, and congratulations on your contract acceptance. We wanted to send you over this video to help you understand how to read the loan estimate that's going to be in your disclosure package. So what you'll want to do is the link that we've sent over, it comes from idsdocs.com. You will want to log into that link with your personal information. And this document will be pretty much all the way down the list, about 3/4 of the way down the list will be a document called your loan estimate. You run through the rest of them first, and then this will be the document though you'll get to that'll explain all the numbers. We do need all the other items, but this is the one that'll have kind of the meat of the information to help you understand your new mortgage terms. A lot of this is going to look very familiar as far as information we've already gone through, just a different format, so we wanted to make sure that you fully understood where everything went on the document. So the new form is called a loan estimate. This replaced the old good faith estimate if you had purchased a home in the past. Some great things about it. It's much easier to read, much clearer on a lot of these pieces. There's just a couple things on here that unless you've done this before, you do not know where these numbers feed from. So we wanted to make sure we go through that with you. So at the top, you're going to have all your information. This one's blacked out because we don't want to, of course, share personal information. This is just a sample. So this is, of course, when we issued it, your information, the property address, sales price, what term of a loan you've selected, if it's a purchase or a refinance, confirming it's a fixed rate, if it's conventional, FHA, VA, and if your rate's locked. Of course, that's something we're going to go through to make sure we lock you in at the best term and the best market time. So sometimes you'll see these that they're locked or not locked, and of course that's something we'll go through with you individually. Bottom here is going to show you the loan amount, the interest rate, and the monthly payment. So this is the monthly principal and interest before any taxes and insurance. So this is the figure that's going to stay 100% the same through your whole life of the mortgage, as far as for most loans. The next section is going to show that you have no prepayment penalty, no balloon payment, so just a standard mortgage term. The next item here, a lot of questions here. This scenario, we've got 5% down conventional. So you're going to notice there's two buckets. You've got years 1 through 10 and years 11 through 30. The reason this is the case on most of the conventional disclosures is you have an automatic drop point for your mortgage insurance. So this 165 in private mortgage insurance is going to drop off at the end of year 10 if this client did nothing on, trying to get it removed sooner. As we've spoken about, mortgage insurance can be dropped quicker than this date. So that's something you'd want to reach out to us to guide you through that scenario. And of course, that's a proactive. You do have to call servicing to drop it off at any point listed before the automatic drop off on your disclosures. Next piece is just your escrow account. So in this case, the $789 for taxes and insurance. You'll notice in the next section, in this example, the $828 being different than the $789. Why that is, in the next section under estimated taxes, insurance, and estimates, the homeowners association dues are included. So the assessments for the HOA are included, and that's why these numbers are different. The HOA dues are always going to be paid outside of your mortgage, so that's why it's not included in the projected payments section. The next is closing cost. Scroll up here a little bit, the closing cost and the estimated closing cost on the loan. This is probably the number one question that we do get on loan disclosures. Why is this so high? So this is a figure for any credits from the seller for property taxes they owe you, fees that are contract specific that they are going to pay, and the later in the year because of the property taxes, the higher this number is. So this is not a true reflection of your actual cost that you are incurring to purchase this home. And also the closing cost word is kind of not the clearest because it's prepaid taxes and insurance as well. And we know in Texas, a large portion of what you need is property taxes and insurance. So next page, we're going to go through how that comes about. This number also feeds into some other couple disclosures. So again, don't be alarmed when this number's high. It is not your true cash to close or closing expense. The next section for estimated cash to close, that's going to include your total estimate that you need to close, including closing costs. So we're not adding, in this example, the 22 and the 12 together. It's just the $22,844 that this client needs to bring to closing for everything involved in the transaction. And on page 2, it's going to show us how we got to those numbers, the meat of the details here. So section A is going to have the origination charges. So in this example, we chose to do no points, no origination, no credits, so just our standard processing and underwriting fees. In sections B and C, we're going to have some of those third-party fees that we spoke about before. So the things that we don't control or we don't charge, but things that you're going to need to purchase. So your appraisal, your attorney's fees, the title insurance, the survey, and we're going to touch on the title insurance and the survey again here in a second with credits. Then your recording for the county at the top in section E. Then prepaids in section F. So however much your homeowner's insurance ends up being, we're going to pay again 1 year of insurance given to your insurance company. And then we're going to have however many days are in the remainder of the month from closing collected. So this number could be anywhere from 1 to 30. And one other touch point, if you have not obtained homeowners insurance, if you will please work on getting quotes for us. We want to make sure that this number is as accurate as possible for your monthly payment and your cash to close. So if you can get that, this estimate will go to an exact if you have not already done that. The next section is your funds that we are going to put in an escrow account for your taxes and insurance. So in this scenario, we're going to have about 3 months of insurance, just as we talked about up front in all our upfront conversations, but you'll notice property taxes went to 6 months. The 6 months comes about because depending on the time of the year, that's the total amount that I need in your escrow account. You, however, are not bringing more than the 3 months that we went over up front unless you're on a new build contract, which we'll address separately. But the 6 months of taxes is what I need in your account. Then if we go scroll all the way down here under other adjustments and other credits, the seller owes a portion of those property taxes to you for the time that they're going to own the house for the year that we're closing in. So in this scenario, we've got 1614, so a credit from the seller to you to pay property taxes. So that's how you're not really bringing the 6 months. It's going to back down with the amount of the money that the seller is giving you down at the bottom. The other thing to note is the escrow account is usually padded a little bit at this point and usually comes down a little bit by the time we get your final numbers. Next section, just any HOA dues, the remainder of title insurance that you may owe. They break it up between section C and H, so just 2 places. And then as you see, we get back down to the totals of all these and back to that big number here at the bottom. Now, in your calculating your cash to close, the total closing cost flows back down here. Then we're going to add your down payment, however much you're putting down on the property, less your deposit. So this at this point is going to show your earnest money and options, so how much you paid for those up front, subtracted of what you more realistically need for closing since you've already deposited those funds. And then seller credits. So this is going to reflect anything on the contract that the seller is obligated to pay for you. So in this case, it's the $28.14 in lender's title insurance plus the survey of $400. So those fees are going to subtract here. Another reason, again, that total closing cost is not accurate because the seller's paying $3,200 of the actual cost, and they're paying another $1,600 of your property taxes. So once we subtract all that, then we get to our true cash to close down here of $22,844. What will happen is we get a little bit closer to the process, we get the insurance, we get the exact title company cost, we figure out if a survey is needed, some of these other details. We're going to give you an exact cash to close no later than 3 days before your closing, but this should be a very close estimate of what we need for your cash to close. Of course, call us if you have any questions. We appreciate you again using us for your mortgage financing, and we look forward to getting your new home. Thanks.